Hello, and welcome to Treasury Talks. Here in Delaware, much of the work outside of state agencies is handled by various boards and commissions made up of government employees, such as myself and my staff, but also private citizens who have an enormous wealth of knowledge who've stepped in to bring their expertise and ideas to the public decision-making process. One such individual who has lent over 40 years of their life to this volunteer work is John Flynn, who serves as the chair of the Cash Management Policy Board. John has had a storied career in both public and private finance, and without his leadership on the board, I doubt Delaware would be in the fantastic financial position that we are in today. John, welcome to Treasury Talks. Could you explain the depth of your professional work in Delaware, the history of the Cash Management Policy Board, and under what circumstances you were approached to serve on the board for Delaware?
I thank you for the opportunity. I'm happy to be here and share a little history of how we got to where we are today. In 1972, the election of 1972, a friend of mine, Tom Maloney, was elected to be mayor of Wilmington, Delaware. And he asked me to come back from Chicago and help and basically run the city for him. So that expanded or solidified, if you will, my interest in management, as I was the chief administrative officer or chief COO of the city of Wilmington for 4 years. And at the end of those 4 years, it was 1976, going into the change of administrations in early 77. And the state had just gone through an existential crisis. And the reason for that was the relationship that it had with a bank called Farmers Bank. And by 1976, that relationship had lasted 169 years. And realistically, I don't think anyone paid much attention to it or looked at the details. Most people assumed that the bank was actually part of the state government. It wasn't. It was run as an independent bank. And in the early 70s, there was an uptick in the economy, and the bank management decided that they needed to grow to compete, I guess, with other banks in Wilmington or in Delaware. However, they got too aggressive. And in early 76, the bank found that its loans went bad, and it was basically bankrupt. So quickly, the FDIC and the state came up with a plan. The state would, in fact, buy more of the bank and have a plan to do a workout of the financial situation. Part of that workout involved the state keeping its $200 million, roughly $200 million, in the bank with no interest. So that was their contribution. In addition to buying more of the bank, that was their additional contribution. And this deal was to run over the next 5 years. At that time, Governor Pete DuPont and at that time Senator or Treasurer Tom Carper worked out a plan to get ready so that when the bank was sold, and it was sold in 1981, the state would have, for the first time, the ability to invest its cash and basically they put together a plan to form the Cash Management Policy Board. What they did is they went out and looked for people with experience in government management, finance and investing, and banking. That's how the Cash Management Policy Board was established in 1981.
And that's how you were approached because of your track record with Wilmington and managing the city of Wilmington.
That's correct. I guess they felt that we had done a good enough job at the city for me to be considered.
And the rest has been history.
Indeed it has. Indeed it has.
Much of the work of the Cash Management Policy Board goes unnoticed, I would say even unappreciated. What does the Cash Management Policy Board mean to the average Delaware citizen? I mean, what's your take there?
Let's start by looking at the structure of the Cash Management Policy Board and then the role that we play. So the structure is that the board consists of 9 people. Four people, 4 of the 9 work for the state government, and that's you, Colleen, the treasurer, the Secretary of Finance, the Secretary of State, and the Controller General. Then 5 outsiders are added to the structure, and those outsiders have the experience in either government management, finance, investments, and banking. So the role, so that's the structure we have, those 9 people. The role that we have is to establish policy for banking relationships first, and then management, safe management of its cash second. What we do is we provide a tool, at least one tool, for the state to use outside expertise to provide safety and liquidity and return, as well as banking expertise, so that we never get into another farmer's bank situation.
I wanted to ask you, though, with your vast experience in both public and private financial sectors, how, with the present economic uncertainties, how would you say that they compare to other downturns that you've seen and that the Cash Management Policy Board has helped us navigate through?
It would be nice if we could look at our history or even at the future and say, the economy is going to grow gradually and nicely and steadily all in one direction. But we know from history that that is not the case. About every 10 to 15 years, there's some kind of correction, a recession, not depression, recession normally. And if we look back over the last 20 years, as an example, let's just take 20 years as a short example here. We've had 3 crises that we've gone through. The first one was in the early 2000s, and that was an economic recession. In the 90s, as you recall, we had the tech boom, and everything was going crazy, going up to 2000 when everybody was predicting, oh my God, we're going to have a problem. But so after that boom, the Fed started raising its rates to slow the economy down and bring it back from a tremendous up to a more sustainable growth. That was that wasn't too bad, actually. I think about it. I think the economy recovered within 2 quarters, and it started to get control and go back again. Now, 07, 08 was a different situation. 07, 08 was not an economic recession. it was a financial recession. And financial recessions don't occur that often, but they take much longer to correct. And if we remember what was going on, the banks got in trouble because they were packaging mortgages that people thought were safe and in effect were not. So it was longer. I would describe 0708 as a slow in and therefore a slow out. But by the time we, the Cash Management Board, actually realized how bad things were, we had to rally and to make some changes in our investments. We had in our allowed investments asset-backed obligations, asset-backed bonds, and mortgage-backed bonds. Well, you know what happened with the mortgage-backed bonds. They went down in a hurry, and even the assets like airplanes and things like that, they weren't holding their own either. So we went back and changed the ability, our ability to invest in that. And for example, now the only mortgage-backed instruments that I think we allow now are ones that are guaranteed by the government. So now it took a long while. We made some changes, made some adjustments. They're good. And in fact, 2020 or 2019, actually the beginning of this year, 2020, it was a bang. I mean, it was a bang. It was no slow in, slow out. Everything shut down in a hurry. The difference, Colleen, is that we have the Fed, the government, and the Federal Reserve Board stepping in and actually weighing in and providing a bridge to get back. Now, the money that has come into the state comes with obligations and some restrictions, and as long as we follow that, then we're fine. So we learned, and we continually review and update 4 times a year our policies for investing and make sure that, as we started out in 1981, we do not lose money for the state.
I would say it's a good objective to have. You know, I love that you give that succinct distinction between an economic and a financial downturn, because I think it's helpful to sort of level set and get a sense of how some of those experiences can be translated to today, but at the same time that today is a very unique environment that we're in. And I would say, you know, I can't say enough just how appreciative I am of your efforts leading the Cash Management Policy Board. And so in closing, could you reflect back upon your service to Delaware and the importance of the public participating in this process and in many of the other processes that we have?
Thank you for your kind words. It's a labor of love. I have benefited greatly from the state, and to me, it's been great to me to be able to give back. So I would encourage people to, if you have an interest, if you would like, I mean, Delaware is great. It's a small enough state that we can have an impact by getting involved.
You know, you're absolutely right. If you consider that there are at least a handful of folks from the public that are on these boards, it is an amazing opportunity to get involved and to help shape some of the things that we do. So I think you're absolutely right. And given how small we are, we tend to, on the boards, you know, we tend to know someone who knows someone, or we're neighbors, or, you know, those types of things, not because we all know each other here in Delaware, but because it is such a small state, that you recognize that some of the decisions that you're making truly impact, people within your reach, that people in your circle, maybe that external circle, but still you know them. And I think that makes a real difference in how we navigate some of these policy decisions, because it's not someone other that we're talking about. We're talking about ourselves and our families, our neighborhoods, our communities that are truly impacted by some of the things that happen on these boards. So I would agree with you. Getting involved is extremely important, and we owe an extreme debt of gratitude to your commitment. So thank you so much, John.